Hey everyone, Caleb and Phil here with your monthly market update
Howdy.
for the Bakersfield multifamily real estate market. I'm just going to go over some numbers with you here, give you the latest insights, give you some insights on what's going on with some of the properties that we're listing, buyers that we're helping, that kind of a thing. So we want to jump right in. We're going to look at the average sale price, which really is not too much of an indicator to follow. It's just because there's only a dozen or a couple dozen properties that sell in any given month, that can fluctuate. Back in June, we had an average sale price of $641,000, and then in May, the month before, we only had $384,000. So it's not really a super great indicator, but we can kind of follow the fluctuations. Typically, they're usually in the high threes to the mid fours is where we see the average sale price. It's $412 this month. Compared to 323 November of last year, so it's kind of hard to.
And again, it just the relevance kind of diminishes just because if a couple higher priced multifamily sell in a given month, then it's going to skew the average price upwards. So very hard to compare and see the trend of pricing. But
sometimes some months you'll get a couple duplexes, 2-on-1s, that kind of thing, and then another month you'll get a 20 unit or something that pulls it up with a $2 million value. So that happens, but typically we're still pretty much within the range. Really, the more accurate statistics that we're looking for is the inventory. That's a big concern, and we talk to a lot of sellers and buyers. Is they're really wondering what's going to happen with the market? Are we going to see an absolute crash as far as prices go? Are we seeing a flood of inventory? We've seen some listings, they're on the market for a little bit longer. I know on the residential side that's certainly the case. But as far as active listings, this month we have for November we had 60 active listings compared to the month before, which is 56. So we're starting to go up a little bit. We're actually still down from July and August, which both had 68 active listings. We're down to 60 now. Something to keep an eye on is new listings added to the market. We only had 23, which was the lowest that we've had in over a year.
Well, and let me just add, looking at our charts, September last year, when it's super hot market, we had actually 63 multifamily properties for sale. And today we have 60 or 61. So inventory is certainly not pushing up. It's like, if anything, the new listings are going down because sellers are more happy with their properties.
Yeah, and I think what happened too is during the summertime, and I really saw this on the residential side too, during the summertime, I think a lot of people and investors felt that the market was going to start to turn starting in the summer. And so all the people that were sitting on the fence kind of freaked out for a second and said, let's hurry up and put this on the market before the market completely turns, and we missed the boat. And so in the summer, we saw in a couple of those months a lot of listings come in. July had 47 new listings come on the market, and that kind of spiked our active listings for a couple months. And now I think people are realizing, okay, interest rates are starting to get higher. The market's settling now, so what are we going to do? So really we're back to normal, where if you are in a position that you're looking to sell, then people want to put their property on the market, but they're not just throwing properties on the market just to try and catch a wave or anything like that. It's just starting to settle back down to normal now.
Yeah, exactly. I mean, it's pretty interesting. And, demand is very high. Like, I'm just really surprised. We just had a listing, a fourplex we put on the market at what we thought was a good price, and it went, we had 8 offers on it. And
at least, yeah.
And we had to put it out to highest and best. So give all the buyers a chance to, bring their best offer forward, and end up selling at about $25,000 over asking price. So that really told us a lot about where the market is in this high interest rate environment. We just still have a lot of demand, and I would say you will see that mostly with the nicer properties in town. Wouldn't you agree?
And the better deals, right? Like that's the key. Is I think some people are still putting properties in the market and they're overpricing them, and those properties are going to sit. I mean, it's always been important, but I think right now is way more important. If you're going to list your property, you have to price it right from the beginning, because investors are going to see that, and if it's overpriced, they're never going to look at it again. And that's a big thing with investors. You look at a deal, you analyze it, it's not good or it's not great, they're just not even going to look at it again. And if it's still on the market 30 days later, they're either going to lowball it or they're never going to touch it again.
Yeah.
Because, most investors look at things and they either jump on it right away or they pass. And once they've made that decision, they don't typically like to do it again. So I think it's even more important now. If you put your property on the market too high, you've just completely shot yourself in the foot, and now you're leaving the door open for lowball offers, and it's going to sit for a while. So that's why it seems like our properties go very quickly still. There's really not that much of a delay between now and a few months ago, and we're still getting some of those bidding wars. But you have to, have a good deal. You have to price it well, and investors will come and flock to it.
Yeah. Yeah, and for the buyers, on the buyer's side, I totally see this market as an opportunity. Yeah, things are slower, and interest rates are higher, but you're seeing a little bit more flexibility on sellers' part in a lot of cases. There's still a lot of demand, but you still have the opportunity to look for the deals where you have way under market rents. That's an opportunity, because you may have to pay quite a bit higher, get a much less return than you would like, the cap rate. But case in point, the fourplex that we sold with 8 offers, we had moved the rents up by about 40 to 50% over a 12-month period. And so those rents were pretty attractive. And so that was part of the attraction of that listing.
Yeah, and some investors are really starting to see now too, if the numbers can sort of make sense, we lock it up and then you can always refinance later. Obviously, you don't want to go into a property buying a dud or buying a lemon where you're going to lose money. But finding out maybe it's time to be a little bit more, the numbers are going to be a little bit tighter now, and then refinance the next 5 years or something like that. And then it's going to be way better, right? Because that rate comes down and it really affects your payment. So if you can find a property that makes sense now with those rates, even if it's just, a little, it's not maybe as great as it was a few months ago with the super low rates. But if you can still make it work and it's decent, then it's going to be way better in a few years as well,
Yeah, and it's still the same case. I think the smartest investors are really looking at California and just the difficulty with building and developing here, creating, a tight market for housing. There's still more new households being formed, more than there are new units coming onto the market. So, that's going to keep demand high, regardless of, interest rates or, what the media says for the rest of the world, rest of the country.
Yeah. And pendings were up last month compared to the month before in October. 18 pendings compared to 17 the month before. It's not that much, but it's still, the demand's not crashing. And interest rates have come down quite substantially in the last few weeks. So whereas they were hovering around 7.5, maybe even 8 for some investors, they're down to 6.25 sometimes, 6.5 now. And so these statistics are still based on when it was 7.5. So we're going to see demand hasn't fallen off a cliff, but see, the thing is, when demand has come down a little bit, supply has also come down. Yeah. So we're kind of in the same market.
It's balanced.
It's still balancing down. Now we do have, because the demand has gone down a little bit, we've gotten the months of inventory are a little bit higher. So compared to 3.7 last month, it's 4.6. Because the numbers are so, there's not that many. We're not talking in the hundreds of houses being listed and sold and stuff on like on a residential level. This number fluctuates quite a bit more because you can have 5 less sold from one month to the other, and it's going to spike the months of inventory. Compared to last year at 4.2, we're at 4.6. It's not super far off, but it does fluctuate quite a bit. I'd be really curious to see what's going to happen over the next few months when we have the interest rates drop. What's going to happen with all the new properties going in escrow? See what our pendings are like. I know we have, not that many new listings, like the lowest amount we've had in the last year. So we'll see if now that interest rates are lowering, people buy more with less listings. We'll see what happens to that next month.
Here's something to think about is, there's a lot of listings on the market maybe that weren't priced right, or people tried to get too high and then they're just sitting there.
Yeah.
So a lot of the inventory is properties like that. But if you look at the ones that have sold, what's our statistics last 1, 2, 3 months on days on market? I think I bet you will find that pretty
Days
low.
on market for the last few months have been in the threes.
Days on market. So September,
market.
35 days. October, 14 days. Average days on the market for properties that sold was 14 days in October and 27 days for November.
Yeah.
That says a lot about the activity. Properties are selling right away.
Yeah, if you have good properties, it's the duds that kind of linger on that really pull, and they skew the statistics a little bit in that direction, because we've seen in so many of our listings, and I'll talk to investors and they say, well, there's properties that are lasting really long in the market, and they say, well, our listings don't really last that long. I'm like, well, yeah, because you price them the right way, right? And we get frenzies over them still. So it's just those times you have to be really careful about pricing it right. You have to do the things that matter to get your property ready to list. And then we're heading into the end of the year. So I'm sure that it's going to be interesting to see what happens this month, because a lot of investors are trying to close out the year strong. You have buyers trying to meet their goals for 2022. They set a goal of how many properties they wanted to buy in this year, so they're going to try and push that out. You got people 1031ing trying to finish out the year, and then you've got sellers trying to sell and close by the end of the year for tax reasons. So probably a lot of activity going to happen this month. Still putting pressure. I know it's kind of frustrating sometimes for investors to think interest rates are high and we are due for a real estate crash, because it's been so long with such a strong market. Just not seeing the indicators that much yet.
Not seeing it.
Everyone's waiting for the foreclosure wave to happen and then flood the market with inventory. We are at almost a record low of foreclosures in this country. We're at 88,000 foreclosures in the first 3 quarters, as opposed to like 200, I think it was like 217,000 in 2019 before all the madness, and 2 million foreclosures back in 2009. So 88,000 compared to 2 million, we're not really, and that's just delinquencies, that's not the foreclosures. We're seeing such a delay in or such a downward trend in delinquencies, which is the precursor to the foreclosures. We're just not seeing that that's going to be a huge issue. And same with supply. We're not seeing a flood of inventory on the market. We're seeing pretty much still within the same lines of seasonal changes for multifamily. And residential, we're seeing a little bit more fluctuation there, but it's already starting to seemingly correct itself. The average sale price on residential is correcting. It went down a little bit, and it's been going up. And it's been going up for the last couple months. So.
Yeah, didn't the latest report on median sale price for single family homes in Bakersfield, it was up 4%, wasn't it?
Yeah, so we've been going up. I think we dipped down to 387 a couple months ago, and now we're 394 or something like that. And that's pretty much right where we were. I think at our highest point back in June, we were at about 416, I think it was. And then we fell off a little bit, and now we're in the mid 390s. So it's pretty much staying fairly put. And same thing with the supply and demand. We had an influx of supply, which I think was more to do with people wanting to not miss that market and to time it perfectly, which is just like catching a falling knife. When they couldn't, they pulled it back off, because we're having a ton of expireds now from everyone that flooded the market. But the demand is still there. Same thing on residential listings, single family listings. There's bidding wars still happening. It's just taking a little bit longer. Days on market's going up because there's a little bit more inventory. But we're starting to compress again. Supply is starting to come back down. Pendings are starting to go back up. And we're starting to trend in that direction again. So we'll see. We just need to keep our eye on it, because we don't know what's going to happen tomorrow, right? So, but as of right now, we're still seeing it's a really strong market. Rents are still going up. Vacancy's low. All the key indicators.
So we want to keep doing this every month and reporting on where things are. But yes, more, we're actually looking at the data and feedback on a daily and weekly basis. So feel free to give us a call if you want to, talk about strategy on your properties.
Yeah, and if you have any questions that are specific questions, feel free to comment and or send us a text, an email, anything like that, and we'll be happy to answer it as well. We're here to answer people's questions and keep you up to date. I know that that's a really important thing for a lot of investors, is they just want to know what's going on. So we're in the business every single day, talking to buyers and sellers, dealing with property, looking at the statistics of everything. So, we have our finger on the pulse of what's happening in the Bakersfield market. So any questions, feel free to let us know, and we'd love to help you out with your property too.
Awesome. See you next time.